Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. It's Friday, it's 2 o'clock. That means it's the weekly market review from the Markets Intelligence Desk with Chris Dearborn. He's our managing director on the desk. This is my favorite week, my favorite day of the week, my favorite hit of the week. We know it's all downhill from here, and what a week it was. There was no shortage of news, starting with politics in the market. You know, we try not to mix politics and business, but how can you not focus on it?
You know, there's three things that you look at when you're trading stocks. One of them is the macro, one is the sector, and one stock-specific news. And there is no lack of macro news out this week. It's been political. And with that, you've seen trading volumes. We expected a little bit more, but not so much. And, you know, the other day, you saw almost some of the lightest trading volumes days of the month so far. Everyone's watching what's going on down in D.C. It might be one of the few times that there's more influence coming out of D.C. on the markets than out of the New York, San Francisco area.
And you know what's really interesting? I was reading a piece, I believe it was by Commonwealth, excuse me for not remembering, but they had made a great point. Even though we're talking about politics so much right now in the media, politics still really aren't going to affect the outcome of the stock market. It's economic data and corporate earnings that will. That historically, that's proven itself time and time again.
And speaking of which, the economic data we have seen so far is continuing to be excellent. And you're seeing the market still march to all-time highs, even though September traditionally is one of the worst months of the year, especially when people come back into the markets, the volumes start to pick up a little bit. Traditionally, it's been one of the worst months. We're really not that bad. You're kind of on the downtick, but what you're seeing is large cap winners are continuing to pull ahead, while the losers, stocks that are underperforming, continue to draw down. And those large cap winners have larger market caps, so they're pulling the major indexes that they are in up and makes the market look like it's going higher, even though you're seeing the Russell, the S&P mid cap, the S&P small cap all underperforming. You know, you're seeing the S&P mid cap and the small cap trading below the 50-day moving average, which is a sell sign generally speaking. So what that you're seeing a lot of dynamics coming in here, and not just to throw into the fact that it's the end of the quarter. You're going to see a lot of people rejiggering their positions, taking some winners, checking the box for those losers, moving on from them, and looking forward to a strong Q4, which is what everyone's ramping up for.
Well, it's interesting that you say that the small and mid-cap names are underperforming, so that's a Russell 2000. It makes sense. They're interest rate sensitive, right? We just got a hike this week. It's pretty clear we're going to get one in December, although I don't see why it would be a surprise to the market. The Fed has been very clear in telegraphing their intentions.
You're looking at, economists are polling at about a 70% chance right now that we're going to see a fourth interest rate hike in December. So what does that mean? Just like you said, any sector that has interest rate sensitive companies, anybody who's got loans on the book, anybody who is short-term in nature is going to be affected by this. You have transportations, you have utilities, you have some industrials, absolutely some consumer names, and with that you have some companies that you could see some slippage here because of the higher cost to their cash flow.
All right, final day of trading for Q3. Do you expect a lot of volume into the close because we're closing out September?
I was hoping we would. Right now it's one of the lightest volume days of the month. You know, we're still trading. Trading volumes for the week so far have been more in line with what they've been for the year. The average daily volume for the year on the consolidated tape is about 6.8, 6.9 billion. We're at about 6.7 billion for this week, and today we're trending well below that by about 25%. The close could be very much different. Remember, the majority of the volume comes in the first 30 minutes of trading from 9:30 to 10, and then that last hour from 3 p.m. to 4 p.m. Eastern time, with the close and cross generally being the largest print of stock across the board. So we could pick up volumes there, and if we do, then that would be a great sign for the markets to kind of see that normalized volume continue to come back to the markets, as opposed to silent days where you're trading 5.5, 6 billion shares on the consolidated tape, and then outsized days on the downside you're trading 10. You know, last week was the quad witch and the S&P rebalance. We had a nice outside day. We traded over 10 billion shares. The majority of that volume was at the close. And to go along with that, you have the S&P reconfiguring their sectors, which will go into effect come next week on Monday. The trades are starting to take place. So remember, if you're following those sectors, the communications sector is taking the place of the telco sector, and you have a number of companies moving back and forth. So make sure you are educated in what you're looking at there, as opposed to taking it as a shock value. Who is this communication sector? And all of a sudden, Facebook's in there.
Yeah, when you go from telecom getting 6% yield down to 2% with your high growth names moving into it, that's going to change your investment strategy. That's going to be interesting to watch. But to wrap up here, catalyst going to Q4. I can't believe we're talking about the last quarter of 2018. This was a blur. This year was crazy, but that's why we have jobs. This craziness keeps us employed. What are we looking at?
There's a lot going on next week.
There is a lot. earnings, of course.
Earnings start to pick up, right? You got non-farm payroll coming out Friday to see how we did here in September. That's a big number, always has been. On the IPO front, we saw 10 new IPOs priced here on Nasdaq this week. SurveyMonkey was one of them, and we're expecting 8 or 9 for next week as well. So that's 145 IPOs just on Nasdaq alone so far this year. So 9 more next week. What you're seeing now, why that's important, you're seeing inflows into the market, new companies coming to breath, and you're seeing a lot of new money being put to work into those companies. On that, the economic data, there's a ton of it coming out next week. With that, you've got, besides non-farm payroll, you've got, I lost my page here.
You have all the
ISM,
right,
ISM non-manufacturing, ADP,
stuff.
factory orders, trade balance, and also of note, China's closed next week for holidays. So what you're going to be seeing is traders shifting gears. So whether they could be trading out of the U.S. or they're taking the week off. So that may give a break to some of the political rhetoric on the tariff war while going forward, especially with everyone focused on what's going on down in D.C. with the
Sure, there'll be another issue next week. I'm sure we'll be talking about something else. On that note, have a great weekend. Thank you for everything, and everyone enjoy your weekend. Chris will be flying solo next week, as I will be in Washington, D.C. for the Security Traders Association 85th Annual Market Structure Conference, Reshaping the Future. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.